Once they removed Russia from the SWIFT system, other countries woke up and said, wait a minute, if we don't do what, the White House tells us to do, they'll remove us as well. So China, the complaint has been from China and Russia's perspective is that they have to use the currency of their enemy. And the idea was lowering the dollar by 40% to reduce the cost of exports to reduce the U.S. trade deficit. And I said, this is crazy. You don't understand that you lower the dollar by 40%, you're going to cause a crash within 2 years. And they had just sold a third of the national debt to Japan. And these people have zero understanding of the global economy. All right. The 87 crash was, I got called into the Brady Commission. You can look at basically, I think it's the last page. They finally said, well, we think currency had something to do with it. That was about it. All right. You can't get them to say, gee, the G5 caused this or something like that. This event is very similar. It's a capital flow shift. All right. I've warned that probably the country that's going to go bust first is going to be Japan. Their debt to GDP is somewhere around 260 times, it's totally insane. And what you have to understand is that in Japan, the emperor was perceived to be God. Now, he had to resign that title effectively after World War II. But that distinction kind of transferred to the government. So the big, crash in Japan in 1989, all that was because, the government came out and said they will support the market. I warned, I said they cannot. All right. And a lot of companies just lost everything that they had because they believed the government. So you have that very high level of confidence in the government in Japan. It's much greater than you have in the United States or Europe or anything else. So what you had here was Japan with its interest rates basically, going negative, etc. And it was coming to a head. A government fails when you can no longer sell the new debt to pay off the old. That's when the default comes. The amount of debt really is irrelevant. That's going on different things. So the Nikkei fell largely because you also had a lot of these hedge fund guys, just as they were all on Russia back in 98 and the Russian bond market collapsed and long-term capital management and all that stuff. This time they were all in Japan borrowing in yen because it was the cheapest. All right. And then investing elsewhere. Then as the yen started to rise, they're losing money. So then they had to pay off the yen carry trade. So as they're in there trying to buy the yen to get out of the trade, the yen's going up even further. All right. So as the yen's going up, you're basically forcing, all these foreigners, they were selling everything they could get out of the trade. The Japanese that had money overseas were now forced to sell overseas and bring money back. So you had this, sell-off in the United States and during the first week there of August because of capital flows. So the Japanese are having to sell and bring it back because from their perspective, the yen's going up, so they're losing money and denominated in dollars or euros, etc. All right. And then as the yen goes up even more, what we see is a 3% drop, they see as a 20% drop. All right, so that's more or less, it was very complicated, but it was the unwinding of this carry trade. And the fact that the interest rates were not going to remain low in Japan. But this is, I've seen this so many times throughout my 50-year career. When the Swiss peg to the euro broke, the banks had sold all these mortgages in Swiss francs to people. Oh, you'll save money and interest this way. Okay, fine. And then the peg broke, the Swiss franc went up, and people lost 20% on their mortgages. All right, the same thing happened in the 80s in Australia. The bankers were all selling Swiss loans to save money on interest, and then same thing happens. And all of a sudden there's a major financial crisis in Australia because the Swiss franc goes up. So many of these people don't understand this, but this is the same thing in China. Much of, the Chinese government did not act like a dictator. It maybe should have. But it warned the provinces and these real estate companies, do not borrow in dollars. And they were doing the same thing, borrowing in dollars because it was cheap interest rates. Then all of a sudden that reverses, the dollar starts going up, and what you lose on the currency side is far greater than you would have ever saved in interest for a 10-year period. So you end up with these major problems all the time. And it's always the same scheme that's presented. So we have to understand that it's international capital flows. And when somebody tells you to borrow in another currency because it's cheaper than this one, be careful, because the currency flips and you're going to lose more money. But this, I've seen this same scenario, as I said, year after year. I mean, and around the world. So that's really what sparked the crisis, this unwinding of the carry trade. Now the markets, I warned that, look, the market will then bounce back. The low should have been Monday temporarily, and that's all come out. You have to understand these are capital flows. And it's not somebody waking up and say, oh, gee, I think the stock market's way overvalued. Let me take profit. That wasn't it. That day's eventually coming, but not, it will be a different reason. So you're getting this bounce, and the real risk is that you basically bounce into the end of August, first week of September, and that's where you get more of a high. Then we've got all kinds of uncertainty coming from elections, war. That's when people start pulling money back because you don't know what's going to come tomorrow. Understand that gold is at least independent. All right. The BRICS is not about, oh, gee, the dollar's not backed by gold. Well, no currency is backed by gold. All right. And they're not going to do that. The BRICS is about geopolitics. Once they remove Russia from the SWIFT system, other countries woke up and said, wait a minute. If we don't do what the White House tells us to do, they'll remove us as well. So China, the complaint has been from China and Russia's perspective is that they have to use the currency of their enemy. All right. But the reserve status of the dollar is not because of the government, the Federal Reserve, or anything else. All right. Reserve status has been mainly because the United States has a consumer-based economy. That's what rebuilt the world after World War II. All right. So Germany needs to build its Porsches and BMWs and sell them to Americans. All right. Japan had to make Toyotas to sell to Americans. Everybody has to sell something here. Okay. We are the consumer-based economy of the world. China has figured that out, and that's why they're trying to create the Silk Road, etc. Germany, on the other hand, is the old 18th century mercantile system. We just build things and sell it to somebody else. If you look at Germans keep their taxes very high because they're afraid of inflation. The net worth of the average German is less than an Italian. It's one of the lowest in Europe. All right. Yet it's the richest country. All right. So it's kind of an anomaly there. China has realized that Germany is not the economic model to follow. It's the United States. So they're trying to build a consumer-based economy. All right. And that's the big difference. That's the reserve status of the dollar. All right. And so this idea that, dollar won't be reserve currency. Sorry. This is the biggest place for people to sell things. And if you're going to do that, you have to price it in dollars in order to sell it. Okay. And so it's an economic issue. It's not what the dollar is backed on and who's behind it or anything else. That's all just, a bunch of theories thrown into a pot and shaken up. But the reason central banks have been buying gold is because the Biden administration has turned the dollar into a geopolitical weapon. All right. So it's got nothing to do with backing or anything like that. So they've been moving more towards central banks have been buying gold because it's independent. All right. So, and you have to understand, don't judge them by an investor. They're not buying it because they think, it's going to go up and I'll make some money. That's not, they don't do that. Okay. They're not interested in they're not a trader. They're buying gold. Even if it goes down, it goes up, they don't really care. They're divesting themselves from the dollar and euro.